In this presentation, we're going to record a purchase order that is then billed and then paid. In other words, we sent out a purchase order requesting inventory, in our case, a guitar, because we buy and sell guitars. And then that purchase order is going to be billed once we receive the inventory. So we are then imagining receiving the inventory at this point in time, recording the billed amount, entering the bill and the payable, and then we will pay off the bill for the inventory. Let's zoom into it with Xero. Here we are in our Get Great Guitars dashboard. We're going to be opening up our reports first. Let's go to the old accounting drop down and open up that balance sheet report. When the balance sheet report opens up, we're going to be duplicating the tab up top by going to that tab and right-clicking on it, then duplicating that tab. Then we're going to go back to the tab to the left. We'll do the same thing for the income statement by going to the accounting drop down and opening up that income statement. Once it opens up, we're going to do the same process. We're going to go up to that tab up top. We're going to duplicate it. Let's do that now. I think it's good enough. We're going to be up there. We're going to right-click on it. We are then going to duplicate that tab. So we have our balance sheet. Let's go back to the balance sheet on the right. I'm going to then change the date to 2020. So we're going to bring it up to 2020. I can't see. And we'll bring it up here to January 31st, 2020 and update that. Now let's take a look at our flow chart just to consider what's going on. This is in QuickBooks Desktop, and we're just looking at the flow chart there. That's all we're doing over here. And you'll recall our story here is that we have a purchase order that we're purchasing a guitar. So we're imagining someone came into our shop. They said, hey, I need a guitar. And we said, we have this nice guitar here. And they said, no, I want it in green with a nice little strap on it and whatnot. So we said, all right, we're going to have to order that because we don't have that particular color here. So we're going to order it. And we sent out a purchase order, and we sent out a couple purchase orders ordering the inventory. When we do that, there's no effect on the financial transaction. It's just basically a request saying, hey, we would like this guitar. It's like in green with a strap on it. And then you could send that over. We're not going to record the bill until we receive it. That's the unusual kind of thing with regards to usual purchasing things online if you're just purchasing things normally. Then we expect to receive it. Now we're going to say, okay, now we got the guitar. It's in this like box. We open up the box. There's the guitar. Hey, and there's a bill. There's a bill from them. Invoice from them. Bill to us. We're going to enter into the system. When we enter the bill into the system, now we enter the guitar on the books as an asset for the cost of the guitar, and we enter the bill in the books for the amount that we owe that will increase the accounts payable. That's what we're going to do now because we actually got the physical guitar. Then we're actually going to pay the bill, meaning we're going to basically write a check or electronically pay in some way, decreasing the payable and recording the cash going down. That takes care of the vendor side of things. And then we have this guitar now that we purchased, this one in particular in our story, particularly for a particular customer. So we would then jump over to the customer side of things, create an invoice or a sales receipt so that we can turn around and sell that guitar at a marked up price to the customer, going through then the customer cycle. So right now we're here in the cycle where we're going to be basically, we got the guitar, we're excited about it. It's got a bill on it though, and we're going to have to enter the bill into the system, recording the inventory and the bill related to it. All right, let's do that. What's that going to do? Back here on the balance sheet, well, the accounts that should be affected when we enter the bill would be to increase the inventory and to increase the accounts payable because we haven't yet paid the bill. Let's check it out by going to the first tab now, and we're going to then go to the dashboard. I want to be in the dashboard. I'm going to go down to 100% on the screen, holding down control and make sure I'm down at 100. Otherwise, I don't want it to do anything funny. This is what the screen looks like at 100% on my screen at least. And then we want to go down to the bills you need to pay. Now, we're not looking at a bill. We're looking at a purchase order. We're going to enter kind of the bill, but this is where the purchase orders are too. So the bills are on top and the purchase orders are on the bottom. So we want to be on the bottom because we're dealing with the purchase order that we're going to use that purchase order in order to populate and create a bill from. So now we're going to go, okay, let's go into the purchase orders that are approved here. These are the ones that went out. We sent them out to the vendor to get a guitar. We buy guitars, so we sent them out to the two vendors, that being Gibson and Epiphone, our two vendors that we purchased from. We got the guitar back from Epiphone now, so we got this one. This one came in, so we want to tie this thing out. So what I'm going to do is check off this box, and we're going to say that this purchase order has now been billed, and this is going to move it over from approved to billed. So I'm going to say billed, mark one purchase order as billed. I'm going to say yes. We're going to mark that as billed. And then the purchase order was marked billed, moving it from the approved section over to the billed section. Now we're going to create the bill from the purchase order. And note, you could have done this the other way. You could create the bill and then kind of move it over if you so choose. But now I'm going to go over to the build item here. I'm going to go into that purchase order. So we're going to be opening up the purchase order. This was just the request. Now we're going to take the information that populated the purchase order and create the bill for it. I'm going to make this a little bit larger here. Let's bring it up to 125. Let's see if it can handle it. It doesn't mess up the data input screens. So we're going to then go to the options up top, and we're going to go to create or copy to. So we're going to copy this to a bill. This is a really nice feature because not only can you copy it to a bill, but you could copy it to another purchase order or an invoice. And you'll recall in this scenario, like when we have a purchase order, we might have a purchase order just to populate our store with guitars and not have any particular customer in mind for it. However, in our scenario, as in the case with many type of businesses, we may have issued the purchase order specifically for a particular client. And if that was the case, we can then use this purchase order to populate the invoice, which is nice. We'll see that in a future presentation. So we'll come back here and populate the invoice with it. As it does so, it will not just take the purchase order price here, but the actual invoice price, the sales price that we will have. And that's a great tool. But now we're concentrating in on the bill because we're going to be paying off the purchase order. So then we're going to create a draft. So here we have it. I'm going to say that the date here, I'm going to say is, let's go with the 19th. Let's go with the 19th, and then I'll keep it at that. And this is going to be the bill. We could put the due date. They're going to say is the 30th. Let's keep it there. And the Epiphone has been populated for us, taken directly from the purchase order on over to the bill that has been created. What's this going to do? It's going to be increase in the accounts payable, and it's going to be taking the other side to the inventory item. So then we're going to go ahead and approve this. Notice it's on the books too for the cost, that it knows the cost from the inventory item that pulled over from the purchase order. So we're then going to say approve that, and let's check out what happens. I'm going to go to the balance sheet then. And let's go ahead and update and refresh the balance sheet. We should then see the inventory going up. So the inventory asset, if we were to select the inventory asset, should be going up by that $400 on the 19th for an Epiphone Les Paul. It's one of our most common kind of guitars that we buy down here. So we have the Epiphone Les Paul going up for the $14. This would also be populating in on the detailed reports for inventory with that inventory item, another guitar within it. Then we're going to go to the other side for it, and that's going to be in the payable. So I'm going to go down to the payable. So let's go on down to the accounts payable and into that item. And then we have down here the payable here for Epiphone for the 400, increasing for the 400. If we were to select any of those items, of course, it would drill down to the actual document, that being the bill, and it even cites it here as a bill kind of from the purchase order, bill PO item here. So there we have it. Now we need to pay off the purchase order. So I'm going to go back and then go back. And then I'm going to go back to the first tab here. And I'm going to go back up to up top to our cookie trail where I have the purchase order up top. Not the purchase order, but the purchase overview. And that brings us back down to the bills and the purchase orders, which we found by going to the desktop on the home page and then going into the bills section that we owe. So we were down here on the purchase orders now. Now we're going to navigate up here to the bills section because now we have entered the bill that we can then pay. I'm going to go into the $15,400 for the bills. Now we have this item up top, and this is the one from Epiphone that we just put in place, and we have the $400 due amount. We can then select that bill and put the bill for payment here. So I'm going to go down and recall that the payment amount can be on the bottom of the bills. One way we can populate this. So we owe $400. Now let's go ahead and pay that. So we're going to say the amount of payment will be here. We're going to say this is going to be as of, let's keep it at the 19th. And then the paid from, and we're going to take it out of the checking account. So I'm going to take it out of the checking account. I'm not going to put the reference number here. You may want to reference basically the guitar or the purchase order or whatnot. If it was a check, then we would select the check item now. If it's an electronic payment, then we're just entering it into the system. Then we don't need to check anything off. We'll just do the electronic payment and record it in the system. So then we're going to say add the payment. What's going to happen when we do that? It will be decreasing the cash account because it's going to be a payment that we're making and on this bill, and the other side is going to go to the accounts payable going down. Also note you have some nice features down here that we could show the history So if I was to tick off this item, we can see the connections that happened here. So we had a copied from the purchase order. Here's the original purchase order. Here's the approved, and here's the created item for the purchase order. So you got a nice little audit trail down there. You can also add notes with relation to it. So I'm going to go back up top. We're going to say add, and then let's jump back over to our balance sheet and see what happens with it. Back to the balance sheet tab on the right. We're going to be refreshing, or as they say with Xero, updating the screen. So let's go ahead and update the screen. Then let's check out our checking account, which should be going down now for the amount that we're going to be paying for the bill that we created from the purchase order that we made to get an inventory guitar from Epiphone. And that's going to be down here for the $400 that we paid. So here's the $400 that we paid here. I went a little bit out of order on the dates, so that's okay. So we got the 400 there. And then we're going to go back up top and say the other side is going to go to the accounts payable. So the accounts payable should now be decreasing. So if we go on down to the AP, the accounts payable, here it is, the 15,000. It went back down to that 15,000, which is where we started out at the beginning of this whole process here, because it went up by the 400 or here and then down by the 400 back down.